15 Assets That Are Boosting Wealth, a comprehensive guide. Hey everyone, welcome to the channel. If you're looking to grow your wealth and explore some promising investment opportunities, you've come to the right place. In today's video, we're diving into 15 assets that are making people rich. Let's get started. 1. Investment properties. First up, real estate. Owning property isn't just about having a place to live, it's a powerful investment tool. When you own real estate, you can make money from rent, and more often than not, your property's value will increase over time. You can accelerate your earnings by reinvesting in your property to boost its appeal and functionality. Savvy investors also use the equity from their existing properties to snap up more real estate, either to rent out or flip. 2. Real estate investment trusts, REITs. Next, let's talk about REITs. These trusts manage portfolios of real estate assets and let you invest in them in exchange for a slice of the profits. They often handle big-ticket items like malls or luxury resorts. The cool thing? You get access to premium real estate investments without needing to buy those properties outright. Just keep in mind, REITs can be publicly traded or not. Non-traded REITs are a bit more opaque, so make sure you do your homework to avoid potential conflicts of interest. 3. Retirement investments. Moving on to retirement investments. Because, let's face it, retirement is pricey and only getting pricier. The key here is starting early. Thanks to the magic of compound interest, even a single early investment can balloon over decades. For example, if a 25-year-old invests $5,000 at a 6.5% annual return, by the time they hit 65, that's over $62,000. Wait until you're 40, and that same investment grows to just $24,139. Plus, retirement accounts like 401ks and IRAs offer tax breaks which help you save even more. This is a game where the early bird gets the worm, and that worm is a comfy retirement. 4. Bonds. Bonds are your portfolio's safety net. When you buy a bond, you're lending money to an entity, a government, business, or someone else, and they pay you back with interest over time. They're perfect for balancing the risks of other investments. U.S. Treasury bonds are super secure, but if you're feeling adventurous, corporate or foreign bonds might offer better returns at a higher risk. 5. Stocks. Let's not forget about stocks. While they're riskier, they're also your ticket to rapid wealth growth. Buying stocks means buying pieces of a company. If the company does well, so do you, through rising stock prices and dividends. Long-term investments in reliable companies, or blue-chip stocks, have historically performed well. But if you like a bit of a gamble, cyclical stocks that fluctuate with the economy could be exciting too. If you're new to this, consider starting with a fund to spread out your risk, and definitely talk to a financial advisor to tailor a strategy that fits your goals. 6. Farmland. Next on our list is farmland. Yes, you heard that right. Like traditional real estate, the value of farmland appreciates over time, plus you get the bonus of the land producing profitable products. From 1970 to 2019, farmland boasted an average annual return of 10.2%. It's a solid choice to hedge against inflation and market volatility because, let's face it, people always need to eat. While you can own farmland directly, many investors find it easier to go through REITs or even crowdfunding platforms, although these can have higher barriers to entry like accreditation requirements and fees. 7. Small business investments. Next up, investing in small businesses can offer great returns if you choose wisely. You can get directly involved with equity investments or simply lend money as a silent partner. Equity means buying into a part of the business, potentially yielding high returns and dividends, but also comes with high risk and more responsibility. Debt investments are safer. You lend money and get paid back with interest, without needing to worry about the business's day-to-day operations. Think about it. Investing in a small business like a laundromat or a catering company could be more resilient during economic downturns. 8. Money market funds. Moving on to money market funds. These are perfect if you're looking for a safe place to park your money. Money market funds invest in short-term debt securities, such as government or corporate bonds, and provide regular income. They're a great middle ground between almost no-risk savings accounts and higher-risk stock investments. You won't get rich quick, but you also won't have to lose sleep over drastic market swings. 9. High-yield savings accounts. Let's talk about high-yield savings accounts now. These accounts can offer interest rates of over 5.25%, which beats the national average for traditional savings accounts by a mile. They're particularly great for stashing your emergency funds, being highly accessible and secure, though some might have minimum balance requirements. This is a straightforward way to grow your savings faster than usual, without any additional risk. 10. Index funds. Now, let's dive into index funds. These funds mimic the performance of a market index like the S&P 500 and are a fantastic long-term investment strategy. They're passive, meaning lower fees and less fuss for you. Index funds are ideal for riding out market volatility and are often recommended for retirement savings because over time, they tend to outperform actively managed mutual funds. 11. Entrepreneurship. If you've got a great idea and the drive to see it through, launching your own business could be your ticket to massive wealth. Sure, it's risky and there's no guaranteed paycheck, but the control you have over your financial destiny is unmatched. You decide where to invest your resources, set your prices, and ultimately you reap the rewards as your business and equity grow. Just remember, it's not all instant glory. It takes time, especially with digital ventures like ebooks, to carve out your niche and build a following. 12. Your own home. Moving on to something a bit closer to home, literally. Your residential home isn't just a place to live, it's a significant investment. According to the National Association of Realtors Registered Trademark, homeowners typically gain $225,000 in equity over 10 years. You can leverage this equity through loans or lines of credit for renovations, emergency expenses, or even to consolidate debt. And yes, some of these uses can make interest tax deductible. However, beware of over-leveraging, as it could lead to financial ruin if not managed carefully. 13. Precious metals. Next up, let's talk about precious metals like gold, silver, and platinum. These beauties are more than just shiny objects. They're a hedge against market volatility and inflation. Their value often moves independently of the stock market, making them a solid long-term investment. You can own these metals directly, or if you're not into storing bars of gold under your bed, consider certificates, commodity ETFs, or mining stocks. Each metal has its unique market dynamics, influenced by factors from industrial demand to geopolitical events. 14. Private loans. If you've got a cash reserve and are looking for an interesting way to diversify, think about private lending. Whether it's to a person or a business, offering a loan can net you interest returns of around 5-7%. These loans can be secured with collateral or unsecured, depending on your risk tolerance. It's a great alternative in the real estate sector, especially for those looking to bypass traditional bank loans. But tread carefully. Private lending isn't heavily regulated, making it a bit of a Wild West scenario. 15. Domain names. Last but not least, domain investing. It might sound quirky, but buying up domain names and monetizing them can be a nifty side hustle. You could snag a catchy, brandable name, sit on it, then sell it at a premium to interested businesses. Or you can generate ad revenue from your sites, or even lease out high-demand domains. It's not likely to make you a billionaire overnight, but it's a fun way to earn extra cash that you can reinvest into more substantial ventures. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe for more amazing content. See you in the next video.